Imagine you woke up today with $50,000 sitting in your bank account, completely free to invest. You want this money to grow because keeping it in a regular savings account means inflation is slowly chewing it away. Inflation is the gradual decline of how much your money can buy over time. Naturally, you search the internet for advice and immediately run into two very loud groups of people shouting at each other. One side insists that real estate is the only real path to wealth because you can touch it and nobody is making any more land. The other side claims that buying stocks is far superior because you do not have to fix a leaky toilet at 2 in the morning. Both sides sound incredibly convincing, and both sides have plenty of millionaires to point to as proof. This decision matters because choosing the wrong path for your personality can end up costing you years of hard work and thousands of dollars. Today, we are going to look past the hype and figure out which option actually makes sense for your life. By the end of this, you will know exactly which path fits your personality and how to start moving forward. Let us start with real estate and the biggest reason people absolutely love it. That reason is leverage, which is simply using borrowed money to buy an asset. To understand why this is a massive deal, imagine you want to buy a property worth $200,000. If you had to pay with your own cash, you would need the full $200,000, which takes forever to save. But a bank will happily let you put down $40,000 of your own money and lend you the remaining $160,000. Now, let's say the value of that house goes up by 10%, making it worth $220,000. You did not just make 10% on your $40,000 investment. You actually made $20,000 of profit, which is a massive 50% return on your initial cash. This is why people get hooked on real estate. It allows ordinary people to control huge assets with relatively small amounts of money. Of course, that beautiful 50% gain on paper comes with a catch that real estate gurus love to ignore. Owning a rental property is not a passive investment. It is a part-time job. When you own a home, you are responsible for everything that goes wrong with it. That means when a water pipe bursts on a cold Sunday night, you are the one who has to find a plumber and pay a premium rate to fix it. You also have to deal with the reality of tenants. Most renters are great, but eventually you might get one who stops paying rent and refuses to leave. Suddenly, your steady stream of monthly income disappears, and you are stuck paying a mortgage out of your own pocket while fighting a costly court battle. On top of that, buying and selling property is incredibly expensive. You have to pay agents, lawyers, inspectors, and government taxes, which can easily eat up 10% of the home value before you make a single dollar. Real estate can make you rich, but it demands your time, your patience, and your sanity. This brings us to the stock market,